Good morning, everybody, and welcome to this particular session. And in today's session, I just want to demystify that one confirmation is better than using 5 indicators. Okay, so the goal here is to be able to eliminate indicator stacking or staking and build what we call decisive execution. I'm not saying that indicators are really bad, but there is a video I did about indicators, and I showed you the best way that you can be able to use the indicators. But now I'm taking it in a little bit top high notch, because indicators is the very basic or the elementary aspect of trading, especially for the newbies. That's where you begin from. That's where I begin from. Okay, and then I went up scaling, because you have to scale, you have to grow even in your journey as a trader. Of course, as you gain experience, you also want to grow in terms of how you trade. Okay, so if you need 5 indicators to convince yourself to take a trade, then you probably shouldn't be taking that particular trade. Why? Because more confirmation doesn't equal more probability. It often leads to more confusion. All right, and you realize that most traders, they stack indicators thinking it increases accuracy. So they have, in one chart, they will have the moving averages, they will have the RSI, they will have the MACDs, they will have the stochastics, they will have the trend lines and the divergency, all of them stack in one chart. And what that does, it actually brings in more confusion, because even reading prices becomes hectic. Okay, but what you need to understand, instead of clarity now, because of sticking so many indicators instead of clarity, what happens is that they get hesitation. So in this video, I'll be explaining why one strong confirmation is more powerful than 5 mixed signals. And this one strong confirmation is based on pure price action, not indicators. All right. So this video is for traders who wait for multiple confirmation, still feel unsure after signal aligns, they enter late because they waited too much, or probably they feel overwhelmed by their own charts. So if your analysis feels heavy, this will simplify everything. And here is the shift that I want you to understand. Clarity increases precision, but staking indicators increases delay. The more confirmation you demand, the late you enter a trade, and the worse your risk becomes. Okay, so what are some of the reasons why traders stack indicators? Traders stack indicators because they want a certainty. They think if RSI and MACDs agrees and trend lines agrees, I am safe, or they are safe. But markets don't offer certainty. Market offer probability. So staking indicators is often a symbol of, or a symptom of fear. All right. Sometimes it can be a symptom of fear. It can be lack of trust, that you don't really trust yourself. You don't trust what you're seeing on the charts. It can be a symptom of a compensation. It can also be a symptom of decision paralysis. Right. So you are not increasing probability by staking so many indicators. What you're doing is that you are reducing comfort. And here is the illusion of confluence, because yes, we usually say that don't take trades if you don't have a confluence. All right, but this is what most of the traders miss. Most indicators are based on one same thing: price. RSI, it is derived from price because it imitates what the price is doing. MACD, it is derived from price because it also imitates what the price is doing. Okay, moving average, it is derived from price because it imitates what the price is doing. So staking them isn't independent confirmation. It's not like it's going to give you an independent confirmation. It's one piece of information repeated several times. So if you have stacked 5 indicators, this is one piece of information repeated 5 times. If you have stacked 6 indicators, this is one piece of information, right, repeated 6 times. And that's not confluence, that's actually redundancy. True confirmation should add new information, not echo the old information. That's what I want you to understand. That true confirmation should add new information, not to echo old information. And why more confirmation leads to late entries? The more you wait for alignment, the more price has already moved. By the time, maybe probably the RSI crosses, by the time the MACD confirms, by the time price closes above a moving average, the best entry is gone, right? The best entry is gone. Now, your stop is wider, the reward is smaller, your emotional pressure is high. And ironically, your safe trade in quote, safe in quote, your safe in quote trade becomes riskier. Okay. Now, after all that, what's a strong single confirmation looks like? What does it look like? So instead of 5 indicators, 6 indicators, look for this: liquidity sweep, structure shift, rejection in high liquidity sessions, displacement within balance. Those are the kind of confirmation that you really want to look at. One clear structural confirmation is stronger than 5, 6, 7, 4 reactive indicators. For example, I'm going to give you a very simple example. Price sweeps equal lows, strong bullish displacement forms, minor structure breaks. Or price sweeps equal highs, strong bearish displacement forms, and minor structure breaks. And that's what I want to share my chart so that you can be able to see what I'm talking about. Look at this particular situation. Here we had some equal highs, these highs and these. So those are equal highs. And then now we see the price coming and taking out those equal highs. Okay. So you can see at this particular point, this candle, the week of this candle actually took out those particular highs, right? It took out those particular highs. That is the equal highs here. Then we have a bearish displacement, which forms, okay? Situation. And then now we start seeing the market pushing on the downside. Okay, we start seeing the market pushing on the downside. Okay, so these are kind of very simple confirmations that you really need in the financial markets for you to be able to avoid like sticking a lot of indicators. Okay, to avoid sticking a lot of indicators. Look at another example. Let's check here and see some more examples, right? So let's check here and see. So look at these kind of a scenario here. Don't know. Yes, look at this kind of a scenario here. So what does the market do around these particular levels? Right here we have equal lows. Okay, actually these are Asian lows, I mean London, New York session lows. So the price comes and sweeps those equal lows, and then now we start to displace on the upper direction. Okay, we start to displace on the upper direction. Get my point? Let's check even more. All right, look at this particular scenario. The price comes and sweeps these equal lows there. All right, it sweeps those equal lows there, and then now we have a bullish displacement. We have a bullish displacement that forms. Right, we have a bullish displacement that forms. So you can look at that so many times. All right, you can see even here we have these equal lows, all right, actually around this particular point. So those equal lows, and you see what the price does. It comes and sweeps out those particular lows, and then now we have a bullish displacement. Okay, then again it comes and sweeps this major low here, right? It comes and sweeps that major low, and then now it gives us a bullish displacement with a structure break, all right, with a shift in market structure. or a change of character at this particular point, and then now we start to displace on the upper direction. The price now comes into this order block, all right? The price comes into this particular order block here, this order block here, and then now you can comfortably take your buys from that particular point. Why? Because you have seen the liquidity sweep, and then at this particular point we have a change of character. The price pushed all the way to that point to get a change of character, and then now it comes to the order block, and you can take your trade. Even above the before the shift of the change of character, we also see the price create a shift in market structure. Okay, this high and this low, the price comes again to some levels here, so you could have taken your trade here, or maybe probably the moment the price breaks above these highs as well. So we have so many confirmations here, right? But all we are talking about price sweeps, strong bullish or bearish displacement forms, and then we have minor structure breaks, and therefore you can be able to take your trade comfortably. All right, you can be able to take your trade comfortably. So that single narrative is very enough. So you don't need the RSI, you don't need the MACD, you don't need the moving averages to be able to confirm such kind of a setup. Okay, so you don't need all that to be able to confirm such kind of a setup. All right, so what you need is just that one single confirmation. Just that one single confirmation, it's enough. Right, that is enough to give you the confirmation that you really need. Okay, so structure plus liquidity plus timing, or the time sessions, equals confirmation. Okay, so why simplicity improves execution? Why does that kind of simplicity really improve execution? You realize that when you reduce confirmation, you are able to gain faster decision making, tighter entries, clear invalidation, and less hesitation. And also you're able to lower your emotional fatigue. Why? Because complexity increases second guessing, and simplicity increases consistency, right? So professional traders, they don't seek 10 signals from maybe probably, or they don't seek 10 confirmations. They seek one clear reason why they should enter. And I've shown you that clear reason. And that's what I've been speaking all through. Even in my other various videos that I've been able to do. I've been talking about structure, I've been talking about liquidity, I've been talking about session timing. Those things are very important for you as a trader, so that you can be able to align yourself accordingly. Okay. So initially, myself, I used to thought that staking indicators could maybe probably increase my ability to read the structure, but it didn't really happen that, because I could get entries, yes, but sometimes late entries, no enough risk to reward ratio, and most of the trades, especially if I have losses, therefore I ended up losing even more. But once I simplified one confirmation aligned with the liquidity, my charts became cleaner and my decisions became faster. Why? Because clarity replaced clutter, right? So in summation, what you need to understand is this. In summation, what you need to understand is this is what I'm trying to talk about. Okay, so 5 indicators don't create an edge. Clear reasoning is what creates an edge. So confirmation should add value, improve timing, and clarify the intent, not overwhelming yourself. Okay, so if you need excessive validation, you don't have confidence, you have doubt. So trade with clarity, not comfort. Right, so in the next video, ladies and gentlemen, I'll be talking about why risk to reward ratios don't save bad trades. Because one is to, for instance, 5 setup means nothing if entry itself has no real probability. Okay, so make sure you catch me in the next one, and until the next video, stay safe.